This is our Forex blog for August 19th, 2011. If you watched the last few days of our Forex blog, you notice we have a new tool that allows you to create an intermediate time frame trend. On the top we have the real-time bar-by-bar statistical trend of each individual currency, the dollar versus all the rest. Underneath that we have the intermediate time frame trend, which you can create yourself using a variety of our tools. Different time frames, different weights. I'm hoping that this allows myself and all of our traders to test a lot of different combinations. There's millions of different combinations with partly fast trend tools and other statistical trend tools which are a little bit slower to give a nice blended intermediate time frame trend, but which is also fast. Underneath that we have the daily trend, weekly trend, and monthly trend. So in a perfect world you see incredible strength in one currency, let's say the yen right here, and the intermediate time frame trend is up. The daily trend's up, the weekly trend's up, the monthly trend's up, as you can see at midnight right here. That was the case. At midnight, let's see which currency might have been the weakest. We had the Australian, which is not blood red across the board down there. It looks like the New Zealand's weaker. Let's see if it was weak at midnight. It started to show a little bit of weakness at midnight, about 40 minutes of strength, and then the weakness, continued at 1. At 1, really, or I should say 1:20, the yen's strength resumed and the weakness in the New Zealand resumed. And as you're watching this pair, one pair is weak and the other one's strong, you're looking for trades. And let's bring that trade up. Weak New Zealand, strong yen. Let me take this off. I was just showcasing a new tool on here. At midnight, and especially at 1 o'clock, we're looking to sell this currency. Now, you can see coming up to midnight, the currency came up, kind of made a slightly higher high, then dropped here. It only pulled back about 10 pips. You also have, not every trend is going to continue and give you a lot of pips, but you can see, after 1 o'clock, this did fall. You have a pullback up. It didn't really break that high. You have another drop here. Unfortunately, the New Zealand, after about 2, for the most part, it became, moderately strong throughout the day. Let's look at some other examples. The pound, for the most part, the intermediate time frame trend, daily, weekly, and monthly trend were all up. If you see a currency that's weak and it loses some of its weakness, and then it barely has any weakness, if all the other longer time frame trends are up and you see some real-time strength, it's pretty safe to assume that the intermediate time frame trend will soon shift up. So at 2 o'clock right here, you can really look to buy the pound, and the weakest one at 2, where all the time frames lined up, probably was soon afterwards, at least 215, 220 right here with the dollar. The yen is much stronger than the dollar longer term, so the pound dollar makes a really high probability trade to look for buys at 2 o'clock in the morning. Here's 2 o'clock, and you can see it didn't immediately break out to the upside, but soon afterwards you have a nice little trend line over this kind of like a little mini wedge pattern right here, and it broke out at 225 and it went up from 80 all the way to 26. It went up 46 pips. So this is a clear example of one where the pound's longer term strength is much more than the dollar. The dollar was having weakness, the pound was having strength. Some days you're going to find pairs where you just have blood red across the board. It's a pure trend day all day long. There's 3 hours of extreme strength or weakness, followed by half an hour to hour and a half pullback. Then that strength comes back and continues. Days like this, you have a little bit of weakness followed by a half an hour of strength. A little bit of weakness, 30 minutes of mostly strength. Usually when you see big spikes like this after not much strength or weakness, that trend continues. As you can see, from 8 o'clock onward, 8 to 10, or actually 7:30 to 10, the dollar was consistently weak. The strongest one from that time frame appears to be the euro. The euro had incredible momentum at 7. It was the strongest one at 7. It shifted the intermediate time frame up. The weekly and monthly are just slightly up. And so when 8 o'clock comes by, and this is already starting to get weak here at 7:35, by the way. 7:35 is a better example. you're looking to buy the euro against the weak dollar from 735 onward. Let's look at this at 735. 735 is right here. You can see actually it was 10 minutes later that it broke out. And one nice thing about these tools, you can use regular time frame charts, or you can use what I prefer, which is our range bar charts. The euro, if you want to simulate a 5-minute chart, it typically moves about 6 pips per bar every 5 minutes. The high minus low is about 6 pips. Using a range bar, you can find a lot clearer signal on this. You can see a breakout right here, getting into it about 10 pips early with a tighter stop, and you can see it just went straight up. And anytime you get a breakout like this where it just kind of goes sideways like that, you want to tighten your stop underneath here. You can't even see that on the other 5-minute chart. You also can draw better and more accurate fibs on this, and you can see, look, almost to the pip, and then barely a few pips above it was the ultimate place. So you might have got out of part of your trade right here and got stopped out of the second half right here, and you would have had an average exit price around 80. You would have been in this a little bit early down here at 30. That's a beautiful 50 pip move. The only key to trading is small losses, big wins, and range bars allow you to do that. You always have small losses with range bars if you use them the way we teach. You find each currency has its own normal volatility. So if you like to trade 5-minute bars on the euro, you bring up our ATR function, and from whatever times of the day that you trade, oh, sorry, this is a different folder here. I didn't have that script. One second. Alright, you bring up the ATR function, and from 3 to noon, you can see the euro trades about 6.51 pips per day, averaged over the last 20 days. If you like 15-minute bars, you can put that on there, and in that case, you have almost about 12 pips per bar during that time frame. So 6 pips per bar, 7 pips per bar, very high probability for that particular currency. Let's look at the euro versus some of the other pairs. Again, it got really strong at 7. The weekly monthly trend are down. The daily trend was still, the weekly monthly trend are just slightly up. The daily trend was down, and it actually shifted up at 8. One of the weaker ones at 8 was also the CAD, which has a daily, weekly, monthly trend are down. The intermediate time frame trend was for the most part down. It was just barely up. You can see it's just super, super light green, as light a green as we can make it. And the strength lasted for about 15-20 minutes, and then it kind of subsided, and right here at 8:05 you have extreme weakness. It's pretty safe to assume that intermediate time frame trend is going to shift very quickly afterwards, because all the other time frame trends are in that same direction. So basically you want to look for euro CAD buys as well. This is a very high probability one. If you want to get the exact number of pips per bar to use, that makes sense. Put on a euro CAD. I like 5-minute bars, so I'm going to find one that matches this, and it's about 5.81 pips per bar. So you can round up to 6 pips per bar. And unfortunately that other chart went behind this. And drag it out here. If you ever move your chart, you want to snap it back to where it was. You right click on here and move to save location. Puts it right back, and you don't have to fiddle around with it. It's instant. Bring up the Euro CAD chart. We have a lot of little mini features in the software since we've written it over the last 8 years. And so again, here's 8 o'clock. Let's kind of zoom out and look at this a little bit. You can see it was trending down before, trended up and made a higher high, pulled back with a little bit of weakness in the euro here, and it's just kind of going sideways here. At 7:30, it really has to take out this high before it really is likely to explode up. And it does right here, a little bit after 8. If you really wanted a longer term trade and you don't want to get stopped out with the noise, you'd put it here. You can see it kind of went up and had a little mini I think a lot of traders call them Ross hooks right here, and that's a decent place to put your stop. That's a little bit wider for my case, but you could have always bought the breakout and got out with a 6-7 pip stop, bought again here, and then the second trade took off. Usually fib targets on the first wave are a very good place to, at the very minimum, exit half your trade. In this case, it shot right through the first fib target. I would have probably been out of my whole trade up here at 32. Usually markets don't go and stay above the 1.618 fib target, but nonetheless, this is a good place to get out. You're in the trade a little bit underneath 4,200. You made 30 pips. Not quite as many pips as I anticipated. And let's see what the trend was at 9:30. The euro still has strength at 9:30. The CAD, and notice the CAD lost its weakness about 8:40, and so 8:40 would have been a good time to, start looking to get out of that trade. If you notice the chart at 8:40, right around here, the CAD is no longer weak. So the noise when both currencies are strong or weak together, and one slightly stronger than the other, you oftentimes get this noise in this chop. When one currency's stronger than all the other currencies and the other one's the weakest of all, you get nice trend moves. That's just the way it works. That's why we have these currency meters. But again, at 9:30, you have some weakness in here, and the euro at 9:30 unfortunately has a lot of weakness. When it starts to show a lot of strength back here at 9:50, unfortunately, the CAD is no longer weak, as you can see. So you don't want to trade that strong euro against the CAD at 9:50. You want to find a currency that's weak. The dollar didn't really have the kind of above 80 strength that the CAD did, and so at what is that time? 9:40, 9:50, the euro dollar is a much better one to look for buys in again. The CAD, if the euro is slightly stronger than the semi-strong CAD, it's still going to go up, but you're not going to get as many pips. Here's 9:30, and the market had a little bit of a pullback. You can kind of see this trade right here. Let's get rid of, whoops. You have a nice little pullback right here, which is very easy to see on time-based charts or range-based charts, and you have this last wave up here as an idea of where your fib targets will be. And again, if you are greedy and you hold on past the 1.618, you're most of the time going to give back profit. I think 60 to 70% of the time or more, some days every single time, the 1.618 is the maximum move. And virtually 90% or more and higher, the 2.0 level. So if you are going to hold on past that because the momentum in real time strong, don't hold past the 2.0. But that trade, I just showed, went from about 4,400 up to 4,450. You're never going to catch every single pip, but out of those 50 pips, you surely would have made, at the very minimum, 20 to 30 pips, All right, let's look at some of the other trades on here. The Swiss, brief amounts of strength today with incredible real-time or intermediate-term momentum in real time as well. Again here, and you have a lot of weakness right here for an hour. It's enough to shift the intermediate time frame down, but there's not really that much follow through on here. And so when some strength comes back at 8, it's very safe to assume the intermediate time frame trend is going to go up. The daily trend's already up, the weekly trend's down in this case, and the monthly trend's up. So most of the time frames are up at 8 o'clock. Again, the weakest one of all of them was the CAD. So the CAD Swiss is going to be a good one to sell at 8 o'clock. I'm just going to use, shouldn't have done that. Yeah, this one actually moves 7 pips per bar on average, so I'm going to change that to 7 pips per bar. This is a little bit more volatile than the euro dollar by a pip per bar, so you have to have a little bit bigger stop. We'll put a 7 R on here and use a 7 pips per bar. At 8 o'clock, again, the Swiss was strong and the CAD was weak, and this one's kind of chopping around here. You can see just a lot of choppy price action because they both were strong and weak for the most part most of the day together. One was slightly stronger and it inched its way up, and then the other one became slightly stronger and it inched its way down. At 8 o'clock, you knew that the CAD was really weak and the Swiss was strong, so you might want to kind of sell this trend line break right here just to make sure you don't get into unnecessary loss, and with your stop a pip or two above the high here. And it kind of just works its way down. You might want to use trend lines to get out of this, and you might be out of the trade here at 50, but you can see that's almost about 40 pip move. Or if you're a scalper, you can just take each trade. You're in here, out here, draw your trend line over here, you're out. You made 15, 20 pips. Whenever you have a strong trend with the range bars, especially when they're properly configured for each currency's volatility, a strong trend followed by a counter trend move, 2 to 5 bar green up bars followed by 1 bar down, that's your entry signal using the range bars. You also have a wick here. Wicks oftentimes kind of predict reversals. Not all the time, but especially when you're trading the strongest and weakest ones, they have a very high win rate with that alone. So you would go short a pip below this bar's low, and you can see it kind of came down and went sideways. You always want to move. Let's get rid of some of these lines on here. If you're short and you expect the trend to continue, just tighten your stop from above there to here, and it went down again and kind of went sideways, and you can yank your stop down. And again, don't get greedy. If you see a decent sized move, draw your fibs on that and get out at the fib target. It's usually going to be the end of the move. So this is pretty close to it right here. Getting out of the trade right here at 34 is pretty decent. The first trade, if you were scalping that, you made 20 or 30 pips. Shorted again here at 86, out somewhere around 30 for another 50 pips. This one wasn't the most smooth, explosive one-way trend. Sometimes you have these range bars go up 5 to 10 bars in a row, moving tremendous amount of pips immediately. Last night the yen at about 9 o'clock was incredibly strong. Let's find out which one was the weakest at that point. Yeah, there's a little bit of weakness in the CAD at that point. CAD yen last night, Asian session, probably would have been a pretty decent one to sell. Let's wait for this to load. And it sure was. This one's probably a little bit less volatile, so we probably want to use maybe 5 pips per bar. So here's coming up to midnight. The CAD became weak. The yen was strong on all time frames. You have a beautiful little trend line break right here, and you can see it fell, pretty quickly, about 50-55 pips. You probably would have got out of it somewhere in this chop right here. Most of us would. But basically, you knew to sell this one, and on every up move, you look to sell it. You have a move here, here. Some of the moves are only 5 to 15 pips, and some are 20 or 30. But the currency meter allows you to focus on ones that are, most lined up. At 9:30 right here, the New Zealand became the weakest. We know that the pound was consistently strong throughout the day. The daily, weekly, monthly trend are up. And when you see at 9:30 right here, the pound is super strong. You have a beautiful pound New Zealand buy at 9:30. This is a pair that most people don't trade, but when you have these trends that line up so perfectly, you really ought to consider it. This is probably a lot more volatile. I use a 9 pips per bar. Here's 9:30. Currency's kind of chopping around, and notice how much clearer. I should have really put this on a different layer. Let me put this on layer 1 here, so I don't have to keep. Oh, it is on layer 1. I'm going to showcase this currency on a 5-minute chart. And here's 9:30. Just straight up. Where would you get in this? If you missed the first 5 to 10 minutes of this trade, when would you get in it? All the way up here, as this thing explodes up 100 and something pips? You don't have those opportunities. But in a range-based chart, here's 9:30. You already knew that this one was likely to go up, and it did. You could have, first of all, got in this trade a lot early, but you also have a nice little sideways rectangle pattern right here. You could get into it, which you do not have on a 5-minute chart. If you don't have range-based charts, you really are trading with archaic tools. These give you a much better picture. And if you miss that, this was the strongest versus weakest currency, you have this breakout here. Even if you got into it not at the first entry, not at the second entry, but the third entry, you can see if you got into it here at 2103 and out at the first bar, you made 30 pips in this. You know, and then here you got a pullback. If this trend's going to continue, you buy a breakout over this area, and it never breaks out, so you don't have a trade, you don't have a loss. The range bars are absolutely phenomenal, and whether you use our software or some other software, you really should consider it. The advantage of our software is we tell you the most logical number of pips per bar to use on each currency. So, you know, you don't even have to think about it. We have very advanced statistics that other, you know, softwares that do have range-based bars don't have. And so you're really kind of guessing what the volatility is, and we tell you the exact volatility for whatever time of the day you're trading. If you trade 8 a.m. until noon, you can find the volatility for that time frame and get a very accurate number of pips per bar and get an even clearer picture.